Today, CBA's crypto launch paused. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and prop news with a distinctively Australian flavour. Well, maybe not surprisingly, but Australia's largest bank has paused the launch of cryptocurrency trading through its app amid turmoil and uncertainty in the market, according to The Guardian. Commonwealth Bank announced in November last year plans to allow its customers to buy and sell cryptocurrency through its app. Under the plan, customers would be able to buy up to 10 cryptocurrency assets, including Bitcoin, Ethereum and Litecoin. The bank had planned an initial pilot before progressively rolling out more features to more customers in 2022. But Guardian Australia has confirmed the rollout is paused with no time set for when it will resume. Those who were on the initial pilot have not been able to continue trading crypto through the app. The chief executive of the Commonwealth Bank, Matt Common, said the company was working on the feedback received from customers, but indicated more regulation would be needed before advancing to the next stage. As events of the last week have reinforced, it is clearly a very volatile sector that remains an enormous amount of interest. But alongside that volatility and awareness, and I guess the scale, certainly globally, you can see there is a lot of interest from regulators and people thinking about the best way to regulate that, he said in the tech briefing this week. The Federal Treasury, of course, is consulting on regulation around cryptocurrency, with submissions open until the 27th of May. And Common indicated that the government formed after the election would be focused on how to most appropriately regulate the sector. We want to continue to play a leading role in providing input into that and shaping the most appropriate regulatory outcome, he said. Our intention still at this stage is to restart the pilot, but there is still a couple of things that we want to work through on a regulatory front to make sure that this is most appropriate. Now, of course, it's a tumultuous time for cryptocurrency. Stablecoin Terra collapsed this month, causing an effective crypto crash that wiped between 15 and 25% off the value of most major cryptocurrencies. Dr. Demetrius Samapassis, a lecturer in fintech leadership and entrepreneurship at Swinburne University, said large incumbents such as CBA were scared about the potential reputational damage from association with crypto. He said it was about balancing risk and CBA would keep working on it in the background to retain first mover advantage. The cautionary tone is also a signal to investors, shareholders and ecosystem stakeholders, since the perceived inbound and outbound risk for CBA is probably higher after embarking on such a journey, he said. I do not believe that the project, at least for now, is stalled, but balancing risk, brand equity and regulatory clarity will be key so as to minimise disruption in CBA's current business model. The crypto crash may well also throw into question a recent $25 million deal between cryptocurrency exchange platform Crypto.com and the Australian Football League announced in January. Under the 5-year deal, Crypto.com will have exclusive naming rights for the AFL score review during the Premiership and final series matches. The AFL refused to comment on the deal, saying it doesn't discuss commercial partnerships. And a spokesperson for Crypto.com wouldn't say whether the deal was paid in cash or cryptocurrency, but said the company was still committed to the partnership. Crypto.com remains fully committed to its sports sponsorships. We are well financed and there are multi-year contracts which will continue to play a crucial role in our mission to accelerate the world's transition to cryptocurrency. So here we have it, another example of collateral fallout from the fall in cryptocurrencies, and CBA was probably right to halt what it was doing. After all, there were significant risks already on the table, and these have just added yet more. Whether they restart, of course, will depend on what happens down the track, but I regard this as another important signal that, in fact, investors should be very cautious of cryptocurrencies, and whilst there are still many people spruiking the future of crypto in the current environment, we should remain, I think, cautious. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.